What's going on, everybody out there? We're continuing our series of videos where I tell you mistakes I see people doing when they're transacting in real estate. Today's topic is mistakes I see people make when they're choosing a lender. Remember, the lender, when you are purchasing real estate, if you are going to use financing, is probably the most important decision you are going to make. They are going to advise you as to what loan they can give you. They are going to sell you basically a loan, and that loan is a document that you will sign, which is called the note, and you will commit to 30 years of making payments, most likely. It's very important that when you choose your lender, you don't make these mistakes. Top mistake, although these are in no order, that I see people make: failing to prepare. Remember in 2007, 2008, we had the foreclosure crisis? Remember how many loans went bad? Well, guess what? The banks, they learned from their mistake. Nowadays, when you go out there and you apply for a loan, the banks are going to ask you, probably for 2 years of tax returns. They're going to ask you for pay stubs. They're going to ask you to verify your bills. They already made that mistake once. They're not going to do it again. Banks nowadays are verifying everything. They want to make sure that after you factor in your new loan, that you're going to have money to pay all your bills, and you're going to have some money left over to eat, right? All your money's not going to go to your mortgage. So if you don't have all your documents organized and you can't verify where all your income comes from, for example, a common issue is people who are self-employed. A lot of people that are self-employed, they have money coming from different income streams. They may make money doing one thing, Monday, Tuesday, Wednesday, Thursday, they make money off different clients. They got to go through all their accounts. The lender wants to look through all of that to make sure, is this person really making enough money to pay me back? Which is the important thing, right? They want to make sure that they can get paid back. And if they can't verify that you make enough money to pay the loan, that's an issue for them. So the more organized you are, the more prepared you are to have everything to show, look, this is where I make the money. This is, for example, if you're self-employed, these are some of the contracts I have that generate income for me. If you can't verify any of that, they can't verify that you can pay. And if you can't pay, you can't get a mortgage. My second tip for you guys when you're out there, don't wait to the last minute to pick your lender. Remember, first I told you, be prepared, have all your financials, do some due diligence. Now, what you're also going to want to make sure is don't wait until you start looking for a house to pick a lender. Because guess what's going to happen? You're going to go out there, you're going to be looking. Looking for houses is a very tedious process, but there comes that moment where you just walk into a house and you're like, wow, this is the one. Guess what? It turns out that house is a hot house. Your realtor is going to tell you, we need to make an offer right away if you want to make an offer, but we can't make an offer without a lender. So you're going to go to the first person you find and you're going to make the offer. You're going to be so excited about the financials, the price, this and that, but you're not really focusing on the loan, right? Well, guess what's going to happen? You're going to pick the first person you run into for a loan. Then you're going to get a term sheet and you're going to be like, wait, this is pretty expensive. Could I have gotten something better? Should I have shopped it around? Well, here's your other issue. You're under contract now. You have 30 days to close. You really don't have a lot of time to shop around. I can't tell you how many people we've had at that closing table right behind me where they get to the end and they're like, man, I can't believe I didn't shop around my loan. For example, sometimes there's programs that people have, like doctors, right? A lot of times doctors, they get favorable loan programs for banking with certain banks because they want to get their business. If you're a VA buyer, you have the whole VA loan process. There's all these programs out there and there's a lot of information. If you don't educate yourself though, you can't take advantage of it. And if you put your back against the wall by making an offer without having your financing completely lined up, guess what? You're going to find yourself in a tough spot because you have a deposit on the line and you have a house that you want to buy. You're going to have to make a decision at that point. So please, take the time, prepare, research lenders, know who you're going to go with well in advance of going out and looking at houses. Third mistake I see people make when they're choosing a lender, assuming all lenders are the same. Remember, when we talk about lenders, we may be talking about a mortgage broker, we may be talking about a loan originator at a bank. All these different individuals that you'll meet, they can all sell you a loan. They're all lenders. Now, what do they focus on? And that's the important thing. You have individuals who know FHA loans very well. They know how to deal with people that have these kind of financials. They know how to get you deposit assistance. They really understand that framework and how to get the deal for the FHA buyer. On the opposite side of the spectrum, you have individuals that work with high net worth individuals. What does this mean? Those individuals tend to have complicated financials. They know how to put packages together. They can give them a variety of options and sell them something. Now, do you want the guy that's used to doing the $2 million loan, handling the complicated $200,000 FHA loan? Probably not. And it's the same way. The guy that handles the FHA loan looks at the $2 million deal as a complicated deal because there's a lot that goes into that. I know most of the professionals that I know, they stick to a certain type of buyer profile and they work that niche really well because they understand all the intricacies of the loan. It becomes very difficult if you're a lender to be a jack of all trades. So when you go out there, not only do you need to know what kind of loans does your lender focus on, but you need to also know what are the different packages that are out there to make sure that the property you're looking at, what kind of bucket it fits in, what kind of loan package you want, and what kind of lender you want to help you, and whether or not they can actually offer you that loan. Because if you have all of that, chances are you probably have the right lender, and chances are you'll be getting the home you want to buy. The fourth mistake I see people make when they're choosing their lender is they go out there looking for lenders and they're comparing interest rates with their friends. What do I mean by that? You go out there, you start looking for a lender, you decide, well, let me send this guy my financials to see what he can offer. And then you look at what he offers you and you're like, whoa, wait a second. You're offering me 4.875%. My friend got 4% when he closed on his house. Well, when did your friend close, right? Because if your friend closed, let's say 6 to 8 months ago, rates were a little bit lower. In fact, I would say probably for the last 12 to 18 months, rates have slowly ticked up. And I've seen a lot of people when they're closing in that closing table right behind us, they're like, whoa, but my friend, yes, but things have slowly been changing and interest rates have ticked up. That's one issue. Issue number two is everybody has different financials. Remember, in a transaction, you may have a certain type of financial profile. The individual you're comparing yourself against may be completely different. I'll give you a common example. You have an individual, he may have great financials. He has very good, he's a salaried employee. He makes the same amount of money every month. When it comes from the perspective of the lender, every year he's had a little bit more money that he's made, so he's gone up. But guess what? His credit score isn't that great. Well, he may take a hit if you compare him with his buddy who also is a salaried employee, has made similar money, but guess what? His credit score has been great. He's never had a late payment. He has a credit score approaching 800. Those are completely different, borrower profiles because guess what? The lender is evaluating risk. And when they're evaluating risk, the riskier you are, the higher the interest rate. So you may be considered a riskier buyer. And that's why I tell you, prepare when you go out there because if you educate yourself with enough time, you might be able to mitigate some of these risks that lenders view you have and get yourself a better loan product and therefore save some money. The fifth mistake I see people making when choosing a lender is choosing an online lender. Now, I'm not knocking the online lenders. For example, I'm talking about some of the bigger brokerage shops like Quicken Loans. Let me tell you, they have great loan products. They have an attractive system, right? It's all online. It happens quickly. They have a huge team. That's all great if you're the borrower that fits their profile. Because typically what ends up happening is if you're a borrower and you have some more complicated financials or you have some blemishes on your record or the property has some issues, guess what ends up happening? That mortgage professional that you're dealing with is just an individual sitting somewhere where, quite frankly, I've never met anybody from Quicken Loans in person. So guess what ends up happening? When you go and you're making an offer and you're halfway through your contract period and you got 15 days to close, something comes up that the lender doesn't like. All of a sudden they say, well, we're not processing the file because we're looking into XYZ. Well, guess what? It's your loan that's on the line. To them, you're just one of many individuals who's processing loans with them. I can't tell you how many times we've had individuals who have had an issue come up in their file and we can't reach someone over there to deal with them and understand that, what is this online lender thinking? What's going on? How do we resolve? And all I get told is, well, a customer support representative will reach out to you. Well, guess what? I have a client with $15,000 on the line and I want to talk to somebody in the underwriting department who can give me an answer. And nobody will call me back because I just get automated emails. So it's something to think about because when you work with a local professional, you're able to work with somebody who's going to walk you through the process. They're going to hold your hand and they're going to be able to show you from A to Z how to do it. So remember, while sometimes things are more efficient, they may have some trade-offs. So think about that when you're choosing your lender.